Lakshmi Iyer, Head of Products and Fixed Income at Kotak Mutual Fund, joins us from Mumbai. Good having you, Lakshmi. Thanks so much for taking the time out. Let's just first talk about the top newsmaker, and that is the rupee. Now, the last 2 or 3 sessions, because we are hitting consistently new lows, a lot of talk about how the rupee could actually slide down even further. 56, people talk about 58 as well. I mean, there are erratic calls of 60, 65, which is a separate thing altogether. But realistically, how damaging do you think the rupee looks? How much further from here?
See, currently, if you see the reason for the slide in the rupee, it's very clearly attributable to global reasons. We've seen a fresh round of troubles brewing around the European Union, predominantly Spain and also Greece. 16 banks have been downgraded recently in Spain, and the outlook has been worsened as far as Greece is concerned. So all that is basically leading to money moving into safe haven asset or currency, single most currency, that is the dollar. And that is what is leading to this rout on the rupee. So it's very difficult to give a sense where it is likely. So it's very easy to give numbers of 58, 60, 62, but the reality is that it has to be seen in tandem with the fact that at some point in time the central bank also would come in to support the rupee, which is what they've been doing right now. But yes, for now the momentum seems to be clearly on the weaker side.
Right. There's some very aggressive bearish bets being put on the currency at this point. What's the worst case scenario in terms of how much more downside would you give to the currency from these levels?
If there is no intervention, RBI has also announced some measures with respect to exporters and a combination of the intervention in the dollar rupee market. If that were to continue, then you will see dollar rupee well behaved, probably in the range, in the current range, probably 55, 56. But if the intervention were to happen at a much slower than anticipated pace, and the route across currencies continue and with more money fleeing into dollars, then probably the numbers that you said, 58 or 60, cannot be really ruled out.
Any other concerns? I mean, you know, we're talking to a few people that this need not necessarily only be a problem for India, because a lot of other Asian currencies are facing the wrong end of the stick, and a lot of this has also got to do largely with the kind of dollar strength that is being positioned. My question really is that, aside of what happens in the near term, do you think this could be a protracted pain, if you're looking at it from an importer's point of view, that it may well reverse a little bit of the losses that it has had, but the rupee could very well stay at these near low levels for a slightly longer period of time than what other people are envisaging?
That's quite possible, because if you see the state of our finances also is not that very great. You see, we have a deficit on the current account as also on the fiscal deficit. If you see from a global counterpart perspective, if you see the Asian peers, the rupee has been the worst hit, closely followed. It's about 17% odd down in the last 1 year, as I talked to you, and about the closest next would be probably a Korean won at about 7%, and maybe an Indonesian rupiah at about 7%. So I think we are worst hit to an extent. Obviously, the FII inflows also have dried up. We've seen April as a negative month for FII flows. May month to date also continues to be a negative period. So if these factors were to continue, then the depreciating rupee, as you rightly said, may not be just a short-term phenomena. But over a long-term perspective, I think given the fact that we still continue to grow at about 6.5%, 7%, as also the fact that at a price point in time, valuations will pull in foreign capital into India, I think the dollar rupee from a slightly 12 to 15 month perspective does not look to be as negative to us than it is today.